Hello everyone, welcome back to another weekly review. So this week was a fairly simple week, and let's get into it. There were two trades, two trading days, 3 trades in total, and this one. And I'll talk about both of these, but let's get into the week. So we have Sunday, which I said I'm currently keeping an eye on the weekly SIBI formed. If she happens to trade up there, I would rather not fill this in. The large wick and up close candle has left me unsure. And what I mean here is that I'm talking about lower prices. Previously, we had a bias from that weekly candle there in beginning of July, or midway July. We were bearish, and I was bearish. I don't know about you, but and I was looking back 60 days to see this low, and we did reach that low. We didn't completely clear it. We left relative equal lows, but we still came down and basically tagged the pool of liquidity. I think that area, maybe has the impression of support. And so we came down there, attacked some of that liquidity, and leave more liquidity down here. Therefore, seeing another run down here in the future is possible and attractive. If we're looking for shorts, it would be an attractive level, holding lots of liquidity. But because of how bullish we were, after trading down there the rest of the week, it to me seems like we may want to actually have more business to do higher. And if you remember, I had mentioned the new day opening gaps, and there was regular trading hours gaps on some of the previous weeks. I think back around here. So, sorry, I'm back. So yeah, regular trading hours gap, new day opening gaps that were left open. And so if there's basically what I'm doing is I'm making a case for price wanting to trade higher to these levels. Also on Monday and then this Tuesday, as we came all the way back up, I did have many people around me in my life tell me that the stock market was crashing, and usually when that happens, it's an indication that there's panic, and when there's panic, you tend to see more movement, reversals, etc. And so this is conveniently when the low was made, as the people were everyone was telling me the stock market's crashing. So I don't know if we're going to come back to this high. It is possible with how the week closed. We could just be coming up to a deeper premium to tag these new day opening gaps and regular trading hours gap. I just don't like how we immediately rebalanced and we are coming back into it. And maybe this is a lack of geopolitical risks or event. There's no event that causes lower movements, because I don't see anything that immediately brings my attention to go lower. And so my attention currently is on those new day opening gaps and regular trading hours gaps. And at open and going forward, I want to study and see if price will target sell side and how price will react once there. If will price continue to displace lower and give some separation. So here I'm talking about this, if the image would load. Alright, so yeah, I'm talking about this sell side. I want to see if price comes down here, and then how will it treat this. Is this going to be a market shift where we're going to hit this constant encroachment and we're going to shift market and then temporarily start to hunt lower? And then how is it going to react as it's doing that? Is it just small liquidity sweep, or is it going to continue higher, or is it going to retrace deeper into premium, that sort of thing? And so you get now to the dollar, and dollar has been weird because dollar recently has fallen. I mean, I have a bullish bias on the dollar just because of nothing technical but fundamental. And then we're seeing dollar decline as well as these stock markets and all, and so this is maybe showing that there was a lot of stress in the global financial system, and that's probably because of obviously the carry trade in Japan, which is going to resume, by the way. The rates aren't going to go up, but that sell side liquidity getting tagged and seeing this long wick close back up it could be bullish, and then we could start to target buy side liquidity again. And the bonds worked out well. So the bonds I had a bullish bias on, and I think it was pretty obvious that fundamentally the bonds would go higher, with everyone believing so much that there are rate cuts in September. Everyone bought up bonds and they went up, right? Because everyone believed so hard that there's going to be a rate cut. It's like the effects of the rate cuts were factored into the economy before there was even a rate cut. So it begs the question if they even need to cut rates. But I just want to see how we're treating this inverse fair value gap here with the bonds. Nothing else really. I'm going to look at this tomorrow, how it played out. I didn't really look at it all week, but I only look at it on the weekends. But so far what I'm seeing is order flow is bullish. There's nothing bearish yet. We are rejecting this buy side liquidity, so seeing short-term lower prices is possible. And on the 5-year bond ZN, I believe, or ZF, you have relative equal lows, from on the daily or weekly chart, which could get targeted again and continue this bearish market for the bonds. And that's it for the weekly analysis. Now going to Monday. Monday was actually, it was choppy, but it was actually not that bad compared to some of the other days, if I have to be honest. But as you look at the daily candle, we didn't really do anything. And I'll take a look at what I was thinking on Monday. Immediately, I feel uncomfortable with the price action so far. We are really slow and not doing much, and so this is where at 9 o'clock where we started trading on Monday, and then you can see where we closed. It doesn't look much different. We didn't really change anything in how the day looks, except for where we closed. So that willingness to trade, it was not there. And I wanted Monday to do good things because Friday kind of consolidated, but we had another choppy day. And that's normal because we have CPI on Wednesday, right? If you look at the economic calendar, we have PPI and CPI. So even though Friday consolidated and Monday can see a lot of volatility, the fact that we have the core PPI and the CPI, or PPI and CPI, that's huge news right there. And I think obviously most of the volatility, most of the volume is being reserved until those days. But she made a clean run lower to clean up all the overnight stops in the trend. So you see there was a trend overnight that built up liquidity, and then at the right time, 9:30 a.m., we disrupted all that liquidity. We didn't have to come down to this low, but we ended up doing so, and this is the low of the day. So we created a new low of the day, and price then turned and created a new high of the day, right? This is simply intraday seek and destroy. You really only had 2 really hours where you could have found ideas. If I'm just looking at this chart, there's only 2 times where I think I could have found, maybe during Asia, that volatility there, or like in the beginning of London, but there's just this move lower, which is obvious at the time, and then once we grab the liquidity, we come back higher to stop out anyone running on these shorts. So looking at the 7:30 hour, or 7 o'clock hour to 9 o'clock hour, those 2 hours, we have this order block form after taking out some liquidity, leaving relative equal highs though. So even though it took out liquidity, it's still relatively equal, and price comes back into it in the future. But we leave that order block, which fails to trade above this high, and then it gets rejected immediately, which is used as resistance to run lower down to the 15-minute 50% of that wick. It's a long wick there, and so 50% of that. No, that's not what I wanted to do. Oh no, I was trying to turn on, there we go, trying to turn this thing on, and I have to wait. Alright, and we're looking closer in what, so I'm back. Looking closer at this, with the 15-minute order block, you see there's a nice breaker, short-term high that gets, factored in, and we reject, leaving this fair value gap, which gets traded to, and, people may be going short here. You have the idea of a market shift, you have a trend, you have everything you need to see this nice trend has built up lots of liquidity lower, and you have everything you need to see in order to have a run on stops, except for the idea to convince people to go lower. And so you don't have much of that until here, and it's not the right time. So right at 7, we make that run lower and we come right back up above it. Notice how the way we come up above it, you see how we leave these bullish fair value gaps. So as people get stopped out, they may be reversing, or more people may be getting into longs. That's what I like to see. I like to see price convince people to go both ways before actually making the real move. And this gap is then inverse. You see how it acts as resistance after we get beneath it to run it down at 9:30 open to that 50% constant encroachment. And then we have a nice reversal, bring it all the way back up. So this is the exact same thing I was talking about. You see how we're showing down here, we're showing willingness for people to go up and get into longs, and then it fails, and then people have willingness to go short into with those fair value gaps, order blocks, or whatever you want to use. The break of that low, supply and demand zones, and then you run up. You find a nice institutional order flow entry drill, which runs it all the way up, leaving breakaway gaps, which is significant. When we leave these gaps and we don't trade back to them, that's very bullish. And running all the way back up above that buy side liquidity. Back at 7 a.m., see, as you're looking at this 5-minute inverse fair value gap be traded back to, that that's not something you want along, because you know where the liquidity is and what time it is and where price is going. And so this is something you can go and break down into the lower time frame and find something precise to get you into the market, get you in sync with the move. That's how you should really think of it, to get you in sync. And then even though you would have had to wait until 9:30 open, you could have just waited till 9:30 open and shorted the 5-minute inverse fair value gap or the 50-minute bearish order block. I think if I think of how it would feel in that trade, I would not be comfortable, because you see how it chopped around, went down, up, and this is about 40 minutes of chop. I wouldn't, I don't know about that. Unless you got in up here at that very high, then I wouldn't. If I got in up here, I think I'd be fine, because I could just put a break-even stop and be fine. But there's still lots of choppy price action, sloppy Mondays, and then we have this very excited run higher. I don't like how price traded violently to the upside. This is starting to make me reconsider a bearish bias in seasonal tendency. Unless CPI displaces price lower and engulfs this candle, we could see a retracement to a deeper premium before making new lows. We still have clean daily lows on the daily chart, so I'm going to watch for that. I'm talking about these relative equal lows down here. So here's where we have CPI tomorrow, and I said that this is how Tuesday closed, way much higher. Immediately I was not too sure about seeing lower prices, but I said because of those daily lows, I still think we can come lower. I don't think we're gonna leave those, and so maybe next week, maybe next month, but that willingness to go lower is kind of fading a little bit, and I am open for retracement to a deeper premium, like the inverse fair value gap, to fill in that gap, the gap created on Tuesday. Unfortunately, we didn't get that though, but immediately looking at this chart, something feels off. There is a big lack of sell side delivery. We have pushed up consistently, and this leaves me uncomfortable supporting longs. And this is why I didn't do much this week, because of how we were looking like. You see, for me to profit here, I would need to position myself during London session or early before 9:30, which I don't always feel comfortable doing, and I'm not always up for that or on the charts for that. And so price runs up, without showing any sell side, lows be taken, no big manipulation. Then I did do something wrong on this day, which I'll shortly talk about, but I talked about it more in my recent video on how I build narrative. But I talked about, when we trade above the London high at 8:30 news, this doesn't get treated as a Judas swing, and price prices continued to displace with speed and distance, never giving the impression of reversal. By 10 o'clock, it should have been clear to look for no further trades. I did unfortunately look for shorts in this because I wanted to see something work in my favor. I wasn't content with not doing anything, and tried to force price to bow to my will. And this is where I did one of my mistakes. And I have a recording for this day, and I haven't watched it yet because I didn't want it to impact my trading. The problem is though that maybe I should watch it over the weekend, but I'm gonna be gone this weekend. I'll watch it Sunday evening, I suppose. But as I was taking, or I'll just talk about it here instead. But this day I was very uncomfortable. I'd stopped watching IC stream because I wanted to trade something. But see, when we got above lens high, we initially rejected it, and the fact that before during the 9:30 open, we came back into this range one more time without trading to this high and rejecting it, and we continued to go higher, was indication that we would really go higher and we would not come back down. But I was still trying to frame that, because I wanted to trade something, and I didn't want it too long because we were way up into the range, way above midnight open. We had taken buy side liquidity, and so it was against really what I'm comfortable with in my rules to even long. But we did have my entry pattern where we came into a 15-minute bullish fair value gap, traded beating the 5-minute short-term low. This isn't the 5-minute chart, but there was a 5-minute short-term low at this consolidation, and then we went higher on a small 1-minute gap there, institutional overflow entry drill. You can see where I'm highlighting. But I did try and short inside this, and I watched back ICT stream and how he was treating this area, but he was talking about how he also wanted to see it go lower, but he was talking about what he would need to see for it to really go lower, and I was kind of saying those things. So as price was in this gap, I said I really wanted to displace beneath this gap and show that it really doesn't want to respect it. And the thing is though, when it closed down here, it was enough for me. And if I really think back about how I felt during that trade, I don't think I was able to tell the difference between being scared to lose or it being two-sided. And I don't think it was I was scared to lose. I think it was just two-sided and I was not certain about the trade. But something in me told me that I should just take it anyway. And when it's not certain, don't do anything. And that's something that I'm going to make sure to remember. Because it was clear here it was not two-sided. And then I got a little frustrated when it didn't work, and it showed. It wasn't when it didn't work, it wasn't frustrating, but it was frustrating when it showed that it did want to work. And then I'm like, okay, well, I don't really want to go short again, but I did it anyway. And as I was going short, I realized this is my model to go up, and then I even thought of reversing it, but I'm glad I didn't do that because I held on to it and I took another loss, and you know what, I made it almost all back the next day, so I'm not disappointed at all. Actually, I think I made more the next day than what I lost this day. I'm pretty sure. I don't remember. No, I'm down $30 on a week actually. So anyways, Wednesday, the daily chart is still showing she wants to press higher. I have not given up on lower prices yet. This is where I should have given up, but the reason I gave up on lower prices is because we saw no sell side delivery. We're just kind of overextended, and I want to see a deeper retracement, which is why I wanted to see lower prices. I didn't mean lower prices as in I think we're going to make a high of the week and then we're going to start to trade lower to make a new weekly low. But despite having CPI, prices did not expand to a higher time frame target. However, we still had nice fluctuations in price that provided me with good opportunities. As we move lower to retrace into previous day range, price made a low and ran out the relative equal highs left in the early morning during 9:30 open, CPI, and Asia. Alright, so relative equal highs left, and we traded down to a discount underneath CPI's wick, underneath all the overnight price action, and we created this nice reversal. And then you look closer to this reversal, but yeah, you can deviate. I deviated this run on these stops. You get 2 deviations, which is pretty nice, and that's something. If you deviate this run from high to low, that took out short-term stops and made the low of the reversal. This is like a swing projection. You often see that 1 deviation is always a good target to look for, and it lines up nicely with midnight open. that was kind of like where my trade terminus would have been if I could have just held it for whatever, but I went for what I was comfortable with at the time, and it was 60 points. So I got like 55 points. But what you're seeing is 5-minute chart, make initial attempt to go higher, rejects, and then we make a real attempt to go lower. People maybe get into longs. Instead, we continue to go higher and we violently go the other direction. And you can see that fair value gap there, the bearish fair value gap that gets people into shorts, actually is inversed, and this is where I went long, 60 points, or about 55 points up to this high, and well, that was the trade. And then this is the 15-second chart. I just wanted to show this because I'm not going to talk about it, but this is during CPI. It's just nice delivery, I find. But moving on to Thursday. Thursday was an ugly day, mainly because the news at 8:30 kind of did what I wanted to see. But prices returned to its monthly open. I'd like to see if we get a lot of resistance here. There's still some new day opening gap levels that could be reached, but overall very bullish, and longs are scary this high up. Price ran up aggressively in New York. These are not the types of environments I like to be trading in. I will look deeper into London session because, as we can see, there is some manipulation there. So you can see London session did retrace, and so I want to look at London session and what it did. These are some levels I was paying attention to on the 15-minute chart, which showed displacement. My eye was primarily attracted to the 15-minute balanced price range at around 3 a.m. An hour that it's like a turning point. It tends to run liquidity. So you have this balanced price range, which price makes a high end, refusing to trade into this gap, which is a breakaway gap, as we have that order block. So as we're forming that order block, you can start to frame shorts. You get that short-term high, which makes some nice up-close candles and a nice run up above it, turning, leaving these breakaway gaps. On the 1-minute chart, as we're breaking down here, you can catch an institutional order flow entry drill real quick. You have to be quick about it, and to get in sync with this move underneath the breaker, which then gets used as resistance. So it's pretty nice. And as you can see, the 8:30 news kind of delivered price, and you can see down here, I didn't really want to talk about anything Thursday because it kind of just delivered price higher, and it just was done over there. I turned off the charts. On Friday, price consolidated today after making a large run all week. Yes, to be expected. From the hourly chart, nothing immediate comes to my eye. We had relatively nice runs. I will go into over time frame to study the delivery. So 2 interesting times. The order block created at 7 a.m. and then the inverse fair value gap. So the reason I qualified this breaker here, order block, is because price failed to trade into this breakaway gap. So as we have this up close candle, we have a down close candle right there. That could be an order block. We close above it. We're in, into this wick here. We're in very overbought conditions. And we create this another up close candle, which gets closed beneath. As we aggressively close beneath that, now I'm looking at this, and you see as we trade back, it is proving to be resistance. And resistance here, support over here. And so on the 5-minute chart, you don't have this. I wouldn't have trusted this. If I was trading, I wouldn't have trusted this back here either. It was very sloppy today, right? You see how even though we have that short-term high, we have initial attempt lower, and then we come back to stop those people out. It's not very obvious. It's not obvious at all. Maybe here it's a little more obvious, but still not obvious. So I wouldn't have done anything. On a 1-minute chart, it does look a little better, but it's still, in my opinion, very choppy, low quality, and after I think price is due to consolidate and maybe retrace a little bit, and maybe it's sort of starting to factor that in, but we'll see what happens next week. And with that is the end of the week 26 review. Hope everyone enjoyed, and I hope everyone had a good week, and you have a good weekend, and good luck next week.